Chanchal S Rajora. He's the Group CFO and advisor to the board at Transformers and Rectifiers. Mr. Rajora, good having you. Thank you so much for taking the time out. I hope all is well. Let's start off with the recent...
Morning.
Very good morning. Let's start off with the recent order wins, because you've had a few as we've looked at the announcement. They may have been, maybe some have been small, some have been medium, but there have been quite a few. How is the order inflow looking like? Because almost everybody seems to be suggesting that there is a bit of an issue when it comes to T&D and evacuation, and you might be in the right space therefore.
Thank you, Neeraj. It's always been great actually speaking to you and Tamanna. First of all, let me tell you about the order, what we have got from the Botswana right now. This is basically more important for us is that this is the largest private sector order what we have got for the export. Till now, the bigger orders we were getting from the utilities mainly, but this is a major milestone for us that we are getting big orders from the private sectors for the export size, right? As you're talking about the orders, as on today, when we are sitting here in this quarter, we have got almost 650 crore rupees close to orders in this quarter, and 1/3 of that is coming from the export size. Inquiries are coming, in the same phase, or our execution is going on, and we don't see that any issues in terms of the order inflow and all. Yes, because of the raw material constraints, there was a bit of the issues on the delivery side, but all these things are getting eased up as the days are passing. So we see the industry is going into the right track. Things are going into the right tracks.
Got it.
And orders, as I said, is not a problem. As on today, when we are talking, we are sitting on the order book of 5,400 crore rupees, close to that.
Got it. And I believe when you ended the year, Mr. Rajora, you were sitting on 5,100 crores with about 18 months of revenue visibility. So it might be the same right now. How much of an order inflow do you anticipate, let's say, in the current calendar, if you will, the second half of the year? And would this largely be from the government side, state or central, or are private orders as a proportion of your order book picking up?
If you remember when we spoke last time also, and when we close our financial year on 8th of April, our managing director, Satyans Mamtora, has guided that this financial year will be somewhere near to 8,000 crore rupees of the order book. And we are quite sure that by end of this fiscal year, we'll be having order book close to 8,000 crore rupees.
Wow. Sorry, Mr. Rajora, can you just answer the second part? What's the split here, private versus government orders?
I am coming to that. Look, we have been maintaining since last 2 years around 50% coming from the utility side and 50% coming from the industry side. And we are quite maintaining that, and you'll see that around 50% will be having utilities on board and 50% will be on the industry side as far as the order book is concerned.
Mr. Rajora, very good morning and always a pleasure to speak with you. Just wanted to get your sense on the margins. Margins were, quite healthy in FY25 compared to previous years in the 19% range. Are you seeing signs of this staying on track from Q1? The order book, of course, robust, but in terms of margins, what's the outlook there?
Amanna, first of all, thank you for talking. It's always been a pleasure talking to you. And as far as the margin side is concerned, in the Q1, we are bettering our margins. That is what I can tell you. So it's the margin is going to be into the same trend, and we are looking out to better the bottom lines. As I always keep telling that I am more focused on the PAT. So my target is that how to strengthen the PAT, and we are bettering them up in this quarter. That much I can tell you.
Fair enough. Obviously, I don't want to put you in an uncomfortable situation, but just trying to understand that when you're focused on bettering the PAT, and this is something that would be music to ears of investors, how are you managing to go about it? Because I know backward integration is part of the larger plan. Is that what's coming on board? Is it the quality of orders? Is it timelines of delivery? Just, what is the general sense we can get on what's happening right now?
There are lots of factors which you can count on this. First of all, is the operational efficiencies what we are trying to bring, and we have bought into the system. Right, order inflows are good, margins are bettering up. That is the one part, but that cannot be the continuous part. As always, I've been telling that you can't increase your profitability by increasing the sale price. There are lots of operational efficiency efforts are there, which we are putting into the system, and those are actually contributing into that. We are working on reducing our cost. We are working on reducing our finance cost, and we are quite basically successful into that. Backward integration is one key which is going to be yield us not in this financial year, but from the next financial year, where we are targeting to become the fully backward integrated by mid of the next financial year, and we are right working on that direction. And once the backward integration will take place, I'll be having a leverage of 2 to 2.5% on the margin sides,
Oh,
as well as backward integration is going to help me increase in my revenue also, because my dependency on external forces will reduce, and I can increase the revenue by bringing the operational efficiency into the system through that.
so just to follow up on that, when you're saying backward integration comes on board mid of FY27, if I'm not mistaken, mid of FY27, and
Yes,
sees
mid of next year.
okay, and sees an upside of 2 to 3% from what base? Are we looking at FY25 margins as a base?
You need to look into the FY26
Okay.
margin space.
Okay. So, and you're saying that's going to be in there about the same range or even better. So, the next couple of years is definitely looking good. What is the capex timeline to make all of this happen? Because of course, big capex plans is well over there.
We are investing close to 500 crore rupees in this financial year, bring down this all the backward integration plus the organic expansion of 22,000 MVA, what we are doing into the extra high voltage transformer segments. And all this capex is going to be completed, say, in next 12 to 13 months' time. So that is why I am telling you that the next mid of next financial year, we will be 100% backward integrated. But also we will be adding up another 22,000 MVA capacity in our Moraiya facility, which is the extra high voltage facility. I would also like to mention that last year, April, we have initiated the first real expansion of transformer industry in India, that we had announced a 15,000 MVA expansion in our second unit in Changodar for IDT and distribution transformers, as well as the special duty transformers. And the first phase of that has already been started coming, giving the production from this quarter. And in next 6 months time, that 100% of that will also available for us for the expansion, for the commercial production side.
Mr. Rajora, two quick questions. A lot of capacities coming on stream, India and globally. Do you expect pricing pressure?
I don't think so that, Neeraj. First of all, say in India also, the latest capacity expansion which is going to be done, other than the TARIL's expansion, is coming from the FY28. So we don't see any pressure here. And as well as the demand is so high, wherever it is this expansion comes, the demand is good enough to take care of that. So we don't see that any problem is going to be take place in that.
Okay, great to know. Last question, sir. I mean, I don't recollect whether you gave a formal guidance post your earnings call or in your earnings call or no. But let's say 2,000 crore revenue number and a 16% EBITDA margin number in FY25. What do you go up to? Looking at the order book, sky's the limit. But what's the realistic assessment of revenue and EBITDA margin targets for FY27 or 28?
So Neeraj, in my all the conversations and in my all earning calls, we have been very vocal on saying that in next 3 years down the line, we want to reach to $1 billion revenue. And we are quite intact on that we'll be reaching that. We are very fully prepared and working on that direction. And we are sure that we'll reach that with all the things are in place. Margin size, as I told you, that we'll be nearing around 20% on EBITDA margin in this process, and more importantly, the PAT will be more than 10 to 11% in that. And when I'm talking about the PAT, this PAT, I'm talking about pure operational PAT, nothing related to interest or other income in this. So we will be achieving that very clearly. We had been guiding that the coming year we will be doing around 3,500 crore rupees of revenue, and we are working on that direction, and we are quite hopeful that we'll be reaching that level also.
Okay, so 3,500 crores FY26, by FY28, roughly 8,000 crores, depending on the dollar value. But I'm giving a leeway of about 8,000 crores of revenues by FY28 or thereabouts, with
Yes.
circa 20%
Yes.
margins.
Yes.
Is that a fair assessment?
Yes.
Perfect. Okay.
Yes, that's right.
Mr. Rajora, wish you all the best for that and more. May the cycle last. But thank you so much for speaking to us today. And congrats on the order wins, of course.
Thank you, Neeraj, and looking forward to see you again. Thank
Most
you.
certainly.
Bye bye.